It is Sunday the 6th of October. This is part 2 of my video for the week starting Monday the 7th of October. Last week I looked at the stock markets and we identified this very important trend line in the DAX going back to June 2018, so call it 15 months ago. And we suggested that this would be this would be the key resistance area for the week. Well, as you can see, this was Monday's candle, I do believe. 12,486. I had the trend line in at about 12,510, 12,520. I had us getting out of any longs as we approached the previous high of 12,496 in September. So this level certainly did hold, and if you were lucky enough, smart enough, or whatever it is, to follow the advice that I gave, the market absolutely collapsed. Now, there's no way that I could have predicted we'd have fallen that far. I certainly didn't think so. We did have very good support around 12,100, but we sailed straight through there on, what was that? Was that Tuesday? No, that was Wednesday. It's actually Tuesday, the day that we collapsed. Sailed through it on Wednesday, sailed through everything, right down to the 200-day moving average, the red line, which was an excellent buying opportunity. We bottomed exactly there for a bounce back, but the bounce back wasn't as strong as it was in the US, and really, these candles are more indicating indecisiveness rather than bullishness. Here's the weekly chart again, and we see that blue 100 week moving average having some effect when the market plunged the week before, the last week of September, having a good. So I would imagine that this will act as good resistance on the way back up, anywhere from 12,130 to 12,170 will be key resistance for the week if we break high, which I think is highly unlikely. Of course, we're going to run into a lot of resistance around the 12,480 to 12,520 area, but pressure does seem to be building to the downside in the DAX. I started last week with a negative output for the Emini S&P as well, and that played out quite nicely. You might remember this trend line going back to January 2018. That was absolutely key. It's been a very strong resistance level. We didn't even make it that far. What we had instead was a potential double top pattern here with the high in July and the high in September. So this is what I was warning about, and even a much smaller double top pattern here in the second and third week of September. So I was warning about moves to the downside. We certainly got those moves to the downside. Further than I expected, yes, I would say so, because I would have thought there would have been some support around the sort of 29,240, 2,940, 2,930 area. There was on Tuesday, but Wednesday we sailed through there. Now, very strong. I had a buy level down here at, I think it was 29, what was it now? 2,860, 2,850. That was my buy level for subscribers, and that worked really, really nicely. Hopefully you jumped in on that one. It was pretty simple. It was on my trade sheet. It was on my trade sheet, which wasn't on there on Friday because we'd already done that trade. But we bottomed absolutely at that support level. It was a fairly simple level to spot, and we've had a good bounce back. I must admit, bounce back. I was expecting a good bounce back, but probably not as strong as it was. We took our cue from a good jobs report on Friday in the US. As you can see, the slow stochastics were just getting into oversold territory. The bulls had no hesitation in jumping in, which is exactly what they've done every time we've had a decent decline in this bull market. The weekly candle actually looking pretty positive, leaving that long lower wick, showing how buyers aggressively jumped into the market and took us all the way back up to 29.51 by the close. We opened the week at 29.76, so we're really only down not even 25 points on the week. You wouldn't have thought that, would you? Okay, moving on to the Dow Jones. Actually, before I move on to the Dow Jones, you can see there's a little bit of congestion here around 29.46, 29.58. We got to 29, what was the high? 53. So if we get up through there, and I think we can actually, there's chances of a slightly further recovery. I'll have levels on my reports, but obviously we're going to have to get up through 30.27, 30.48. So there's a good 20-point resistance band there, which is going to be the main problem. I don't personally think we'll even get to test that before the bears return. bearing in mind what we've already seen from the price action That's all I've got to say on the matter, really. Similar picture for the Dow, good bounce back, closed above these moving averages, so in the short term looks quite positive, possibly some further gains, but I don't see us even really testing these previous highs around the 27,300, 27,400 area. I'd be surprised if we got anywhere near there again. We are oversold, so on the daily chart. On the weekly chart, however, we're very overbought. Trading from this trend line, which as you know is around 27,300 to 27,400, down to the 100-week moving average, which has been providing excellent support this year, which comes in at 25,000, call it 25,400, 25,350. Nasdaq lower, of course, less dramatic than the S&P and the Dow Jones. We hit a really good support level down around 7,500. That was my buy level. However, we overran as far as 74. So we overran a little bit further than expected, but every chance that the bulls, the buyers from my reports held on to that. It wasn't a dramatic move lower from 7,500, and we've had a really strong bounce back. You can see where the support came from. This trend line joining the low from June to the low in August, coinciding with some fibs around 75.25, 75.00. So clearly a very good support level there, and it did work. Again, I think we can follow through after we closed on the high for Friday. I think we can follow through at the beginning of the week with some gains, but I don't think we're going to be able to test this trend line up around 79.50 before the bears step in again. If you would like to follow the index or any of the other markets, daytradeideas.co.uk, you can subscribe there.